What is up, everybody? It is Joe Caruso here with Trader Society Academy, bringing you another trade breakdown video for a trade that we had called last week in our signal group. Now, this was a US30 trade that hit the take profit for a total of 575 points, and this trade had minimal drawdown. So I'm going to start off by hopping onto the daily time frame and going through the time frames, and I will show you the confluences on these multiple time frames and how they all come together to create an A plus setup. So starting with the daily time frame, I drew my one trend line from the top, and then I also drew my bullish trend line. So I got crisscross trend lines lining up with the daily 50 moving average. Now, what makes the touch of this daily 50 moving average so important is that this area of structure, I can pull this through, was used multiple times in the past. When I look to the left, I could see it was used as support once, twice, three, four, multiple times over and over. I go more further to the left. It was used as support. It was used as support, support, support. So this area of structure was used over and over again, making it a very significant point of interest. This area was also a 0.5 fib level, adding another layer of confluence. Now I use the fib, the Fibonacci retracement, to mark my stop loss. I use the 618 as my stop loss for this trade. My entry was a little bit past the 50. So on the daily time frame, we had crisscross trend lines. We had a break and retest of the 50 moving average. We had a break and retest of a significant area of structure, and we are going in the direction of the daily time frame. As we can see, price failed to make higher highs. We actually failed to even reach the previous high. And then the break of that level of structure, which was holding up as support. That daily 50 was holding up as dynamic support. It tried, it failed, it broke. This was the retest. So now I'm going to go on to the 4-hour time frame. Now this was the main time frame for the trade, as it was our trademark sharkfin at the 200 moving average. The exact entry that was called was 33,575. I believe price came as high as 33,585, depending on your broker. So this trade had literally less than 10 points of drawdown. It pretty much nailed that point on the dot and then dropped right from there and went straight to the take profit. The reason I chose this take profit is because this is the 4-hour 50 moving average. So looking at price, if I always go under the assumption, if price is bullish, I am selling. Where is the point to where the bullish momentum would continue? And in this case, it would be previous, right here, previous structure. I would be expecting price to retest that area right over here, lined up with the 50 moving average to potentially use as support to push back up. So I wanted to be out before that happened. The take profit was 33,000. That's also a round psychological level. And again, multiple reasons why I wanted to be out at that area. Overall, the trade was a little over a 1-to-3 risk to reward. I'm going to go down on these smaller time frames and show you how this trade looks just as good on the daily as it did on these smaller time frames. Daily was a break and retest of the 50. 4-hour was a sharkfin at the 200. Our 1-hour was sharkfin divergence at the 800 moving average. We had our sharkfin over here that happened at the 200 moving average. That move failed. Price came up. And then we see the divergence happen from this point on. Price made a slightly higher high. Our TDI got lower. Price came even higher, and our TDI continued to get lower. One way to measure whether the divergence is happening or not is you could draw a trend line just for your personal reference. So you could see that price obviously went up, and then you reference the same point on your TDI from point A to point B, And as you can see, your TDI clearly went down while price clearly went up, forming divergence. Now I'm going to hop on the smaller time frame one more time. I'm going to hop on the 5-minute. The 5-minute is used for the actual entry and for stacking, as well as managing the position once it gets going. So I'm going to go and show you the exact trade management and go a little bit into exactly how I stack my positions. Now, because the entry was at 33,575, I did see that there was a potential that 33,500 or 33,550 could be used, and then price could drop from there. So what I had done was I took my first entry at 33,540, I believe it was. Price actually did react at that area and dropped about, it was 100, 150 points and came back up. So what I typically do when this happens, I knew I took my trade at a safe spot, but not at the safest entry. So what I will do when this happens is price came back, hit my break-even point. So what I did is I closed part of my trade. So my risk was highly diminished. You know, I did not keep my original risk because I will not let a position that goes moderately into profit go back against me and become a loss, especially not a full-size loss. You know, in cases like this, I will always cut it and I will look for a better entry. So what I did is I cut part of my position. Price started to consolidate, came up and hit that 33,575 exactly. I took a full-size entry there. And from that point, it was basically history. We broke right through the 5-minute 50, through the 5-minute 200. The TDI never formed the shark fin against us, although I did move my stop loss to break even. Now, the reason why I did that, typically I will wait for a shark fin or a significant move finding confluence going against me. When the 5-minute hit the 200 moving average, that is when I moved my stop loss to break even. So this trade was completely risk-free, called as a signal, you know, far in advance. Everyone that wanted to get in it was able to get in it inside the Trader Society Academy. And this one did take a day to play out. We got into the trade on Monday. The trade actually played out Tuesday after NYSE Open. That was when the big drop happened. And the beautiful part about swing trading is, you know, you get into these trades, as soon as the trade gets to a point where you can move your stop to break even, your trade is essentially risk-free. And there's a beauty to that that is unmatched by many other trading strategies that don't include moving your stop to break even. We do that. And by doing that, we prevent just about 95, 96% of losses from happening. This is also why I'm a fan of, if I am taking multiple positions based on multiple possible entries, I will always cut my risk as price goes against me. Because again, I am always looking to take a better position at a better spot. So I am very quick to realize that if my entry is a little bit early, I will just take a full-size entry at the better location. And with the early entry, once I come to my area of take partials where price may reverse against me, that is where I will often close my early position and I will keep my best placed position riding to the full take profit. A great example on this 4-hour chart is if I look at US30. So we also called buys on our live session about 2 weeks ago off this 800 moving average on the 4-hour. Just to give you a quick summary, the reason being is we had a shark fin happen right here and price got lower and TDI got higher. So this was shark fin divergence on the 4-hour at the 800 moving average. That was the entry. That was the spot, once again, where from this point, price rose about 1,000 points. Again, with minimal drawdown. You can see how entries, specifically shark fin entries off of moving averages, provide amazing trades when they match up with the other confluence. What I wanted to point out about the buys was there were multiple spots of where you could have gotten in. because we see that price not only made a double bottom or a triple bottom, this looks like a quadruple bottom divergence. So there was all these different spots to where you could have gotten in. Again, we will usually enter on moving average. If we have a shark fin near a moving average, oftentimes we are getting in on that moving average, and you could see why. Even you look back in the past, look at what happens when price hits this 200, which is my red line. The 50 is my blue line. Even that, you could see price hits that moving average, reacts. Price hits the moving average, reacts. So when you have a shark fin occurring at that moving average, that will most likely work out at least 80% of the time, maybe 85%. And the beautiful thing is, if you know how and when to move your stop to break even the shark fins that don't play out will give you an opportunity to move your stop to break even based on the smaller time frames. Your 4-hour candle may look like it sank right through the moving average, but if you hop on the smaller time frames, you will almost always see and find where you could have protected yourself. So thank you guys for watching this video. There's more like this to come. And check us out on our website at tradersociety.com.